This week we have Fed FOMC meeting and it is most important news for all the trader and investor. All of these FOMC meeting are important, but FOMC which give us summary of economic projection that are most important. So before we go to March FOMC meeting, Fed will explain what he did in December FOMC meeting and where we are now. And there are many methods to explain what will happen in this FOMC meeting, but I think this chart is best way to understand as a beginner trader. And if you see this first line which represents CPI and last CPI number were 6.5, and while CPI number have already peaked at 9.1% in July last year. And since beginning of macroeconomics, because before World War II, central banker did not know how this thing worked and there was no such thing as macroeconomics. So all the theory, all the rule invented after World War II, there is a trend when inflation goes up, they hike their interest rate and they keep doing until interest rate and inflation rate both match. And important thing which happen all the time in economic history, and if you see Fed interest rate that must cross CPI number. That is why some people were saying that Fed interest rate will go 9%, and now still some people are saying that interest rate will go 6% because current CPI number are 6.5, but CPI has already made top and it is coming down, and in upcoming time it will go down, and Fed target is 2% which we all see in news. But that was their inflation target which they keep secret for so many years, but now that target is public, and their new secret CPI inflation target is either 3 or 4%. This is their new secret target. But Fed don't make his monetary policy based on CPI number. You have to understand. Fed make his monetary policy based on core PCE number, and same like CPI, core PCE number made top at 5.3% in March last year, and current core PCE number are 4.4% which came last week. So officially right now Fed interest rate is above core PCE number but below CPI number, and compared to CPI you can see the difference is just 2% inflation, which Fed is saying so many times in news. So basically their target has achieved, and this entire graph is based on past, and if you see future then interest rate will go something like this, because Jimmy Dimon, CEO of JP Morgan Bank, said that it will go 6%, but CPI is coming down and all the macro traders are waiting for 4%. And similarly core PCE number will also come down. So you can see in future Fed interest rate will be above these two number, above CPI, above core PCE number, That is the rule that you will learn in books, and if you do macroeconomics course, that is the same pattern. But confusing thing always is everyone say most important thing is CPI, and market always show big reaction, but Fed make his monetary policy based on core PCE, and this week they will hike 25 basis point, and then their interest rate will be 4.75, and that will again go above core PCE number. And if you want to understand this entire game, then for some time forget this CPI graph and focus only on this core PCE and Fed interest rate. And now interest rate has crossed core PCE number. That is why this week is last rate hike, and this is your Fed terminal rate. And after that they will stop hiking interest rate, and your new monetary policy trend, which we call Fed rate pause, will start. And since inflation rate and central bank rate both catch each other like magnet, when core PCE will go back to 2% and Fed will stop hiking interest rate, they will not stop there. They will start cutting interest rate, and in that condition target is 2.5, because if they did not cut interest rate, then core PCE number will keep dropping, and after 2% it will go zero. But by the time it reach zero, central bank will panic, and that will be deflation. So your main important thing is Fed rate pause. How long they will hold interest rate above core PCE number, because interest rate movement will stop, but PCE will not stop. It will keep moving downward, and that pause timing can be 3 months or 6 months, but minimum it will be 3 months. And in this FOMC meeting, Fed will give signal that what will be length of rate pause. So longer time means hawkish Fed, and shorter time means dovish Fed. And you must know that in December FOMC meeting, Fed gave terminal rate 5.1%, and he also said that they will cut interest rate only in 2024. But things will change, and market is now expecting that they will announce terminal rate 4.75, and they can give signal for rate cut in fourth quarter this year. So this is expectation for FOMC meeting this week. But again, most important thing is March FOMC meeting, when they will give summary of economic projection, and market is again expecting that Fed will not hike interest rate in March FOMC meeting, and they will again give second warning for rate cut, and market is now expecting that rate cut can happen in September FOMC meeting. And you have to see, if Fed gives signal for rate cut in fourth quarter, then market is so greedy all the time. We all know they will again expect rate cut in July FOMC meeting. And you can verify all of this thing why Fed was tool. Because after rate pause, there is only one thing, which we say rate cut. And last year trend was transitory inflation, and this year trend is soft landing. And if they do rate cut at the same time that market is expecting, then soft landing will become real and there will be less damage in economy, because according to core PCE number, their inflation fight is now almost over. They do not need to hike much higher. And if they repeat that same drama, then this will be another policy mistake. They keep interest rate at terminal rate for much longer time, then that will be deep recession, because same thing happened in 2007 to 2009 when deep recession came. This is same story, same picture, and they are repeating exact same drama. They said that there will be soft landing, but that soft landing later turned into deep recession, because right now recession is under control, everything is under control, but when thing will go out of control, then they will start rate cut. And if you see all this cycle from beginning 2020, when there was full panic, everyone was saying that world will end, corona will eat all of us. That was the time these policies were started and inflation was invented. Then in 2021 inflation came, they were ignoring, and that was transitory inflation because they were enjoying growth. Then last year 2022 they thought that inflation is going out of control, then they start seeing inflation as a risk, so they start hiking interest rate. So last year was inflation risk, but this year 2023 inflation rate is gone because Fed interest rate is now above core PCE, and this year risk is job loss, and this is most important thing. And why that job risk is most important thing? Because in 2024 next year there will be election. So that is why if you consider all of this thing, lag effect of monetary policy and that of middle class for election self interest, and if you forget all of this past, then one more thing, when in 2024 they will change monetary policy to recover growth, and then they will cut interest rate and go back to 2.5%, because these things will happen in 2025 after election. Interest rate will be 2.5, but CPI will go back to 9.1%. That is stagflation, and nobody will tell you this thing in news. So that is the real game, and this is what market expecting right now. This is the target for CPI this year, and this is the rate cut target. And when inflation will again increase, how they will manage? And in the end, because of lag effect, all of these things like NFP and ISM service number, they will drop very fast, and both will come this week after FOMC on Friday. And till December FOMC meeting, interest rate will cross CPI number 2, because that is the strategy of Fed, and that will happen without going 6% interest rate.